Yo, what is up, guys? It is Smc-Cyr back again with another framework video for y'all today. Today we will be just going over, just refreshing inverse fair value gaps as well as going over SMT divergence for you guys today. So, just as a recap, IFVG is a failed fair value gap. You're looking for a strong candlestick closure through the gap that is being traded into. This confluence works best on the 1, 3, and 5-minute time frames, and you can sometimes scale down the 30-second for a little bit more precise entries, I suppose. I guess if there's not even a fair value gap in like the 1-minute to 3-minute leg, you can always go for like a 30-second, but it's not typically my cup of tea, you know. But anyways, guys, it's fucking 12:32 a.m. right now. I've been up since like 7 a.m. today. I can't fucking sleep because my roommate slash cousin has a girl over, and yeah, I'm just listening to her giggle and shit while I'm lying there in bed, just contemplating life, I guess. But yeah, I'll show you guys my trade of the day actually today, right? Okay. Boom. You see this? Liquidity is being swept right here on the higher time frames, right? So you go up to the 1 hour. Boom. Boom. Look at this. We don't exactly get the tap into this 1 hour unfilled, but that's besides the point. Essentially, you see this big ass wick high right here, right? We failed to close below it. Okay, right here. This was when did I even take that? Oh yeah. So yeah, right? Swept liquidity, and then at open on the 5-minute, we never fucking closed below the CE of this rejection block, okay? And that confirms it's a rejection block for me, right? So I have my rejection block and liquidity sweep combination, so I know that I'm okay to earn this gap. All right, so this is my trade idea for the day, just targeting this unfilled 5-minute gap. Little 1 to 3R on that trade. I'll go down the 1 minute so you guys can see it a little bit better potentially. Oops. But yeah, the main course of action for today. Oh yeah, we actually did get that inverse beforehand, and we also have some BPR. So this is just a beautiful trade today. Nobody took this shit. I don't know why people aren't taking these good ass trades, but this week I've been finding just the most like insanely perfect setups for some reason, and I don't know, I just feel like everyone's just fucking not reading it right this week. You guys also have to be aware that the Fed is literally pumping like $8 billion into the market next week, I believe it is. Next video I'll get the exact date for you guys. Actually, hold on. I'll just look it up right now for y'all. Interesting. I swear I saw something on some type of news that the Fed was planning on dumping just trillions into the market, if not billions. I think there's a big difference in this number, obviously, but 8 billion or $8 trillion. I don't think it's 8 trillion because Trump's literally just got fucking approved. Um, so like Israel and the United States government like and military like combined. So Israel, we all love Big Big Ben over there and the Israel, but yeah, man, that shit's just insane. They got like Trump can spend like 1 point something trillion on this war now, just freely spending money. We're already spending easily $1 billion a day on this war, but that's just besides the point, at least, I guess. Um, so yeah, just be careful for an influx in volatility potentially next week, and potential short-term long or short-term bullish bias. Hey, sorry guys, my dog. Come here. Go lay down. Go lay down. Go lay down. He's like tweaking out because his woman is here. Alright guys, SMT divergence is essentially a confirmation confluence, right? You want to essentially use this confluence paired up with something else, right? So I'll use it with a liquidity sweep and a rejection block, right? Because it shows weakness in one index, you know? So you're taking essentially that stronger index, the one that shows more signs of holding, and essentially like I had an example in my brain right before this, but it is what it is, I guess. So yeah, it can also be used to protect your stop losses as well. So it's like NASDAQ takes out a high, right? And the S&P fails to take out that same high. The strength is on ES for the day then. I will not be actually looking to place a trade on NQ for the day, right? Because NQ is just saying, oh yeah, I need to grab this liquidity before I move lower, right? So highs being swept, think bearish. Lows being swept, think bullish, right? Because you want to buy at the bottom and sell at the top, right? Selling a premium and buying a discount, right? We have to use our brains here. This is the smart money technique. Okay? So I will let you guys see this slide. The smart money technique divergence is a relationship between two correlated assets where one creates a higher low or lower low while the other fails to do so. The discrepancy reveals a displacement in institutional order flow and suggests that one market is accumulating or distributing positions before the others follow. So correlated markets, right? You could do NQES. That's it pretty much. And then there's like Micron and NQ is really fucking pretty much whatever Micron does, NQ will do. So if you want to learn that, I would suggest probably getting into swing trading and trading Micron and NQ, but ES and NQ literally everybody uses, and you can see like just by using your brains and looking at the charts that okay, a lot of this stuff is the same, you know. See if I can find anything for you guys right here. Here's an SMT right here for ya. Look. Okay, you guys see this low that was created, correct? The one I'm hovering right over? This low? Sorry. Alright, so what you do is you take your trend line, right? And you basically draw a line to where it's swept. Okay? Okay. You see that it's not swept here either, or it's swept on NASDAQ and it's not swept on ES, right? Either index would be essentially valid to trade on, because we get delivery, obviously this is hindsight and I'm just marking out an example, but super good delivery on this one. So SMT, you could also pair this with liquidity sweep. So essentially ES, you have to essentially assume that ES doesn't need to take out that low anymore, right? That's why you can put your stop loss right there. So the entry would probably be right here around, right? You want to wait for, I would have wait for this second candle to close for sure. This is going to be a negative RR trade, maybe. Yeah, that's not good. That's better. Keeping it under the gap, but you guys see what I'm saying, right? You can use that SMT as protection for price and not want to go there. So this is probably essentially what I would do, right? Obvious breakaway gap here. You guys know breakaway gaps. So just fucking getting a little bit more precise. Get a little bit better RR here. SMT inverse. We get the liquidity sweep on the other asset. So basically ES, you guys just have to look at it like this, I guess. ES is being stubborn here. They're saying, okay, NASDAQ, you're weak as fuck. Get out of here. Right? And then that's bullish SMT. Okay? So, I'll just read these other examples for you guys. Bullish, a higher low formed on one index, and then a lower low formed on the other, right? And then a bearish is a lower high is formed on one index, and a higher high is formed on the other. So the written out example I have here is NASDAQ takes out all-time highs while the S&P fails to do so. This failure of the index to take the highs puts in a bearish SMT. We can assume that the S&P will not sweep this all-time high, that the S&P is being stubborn once again, and we're saying, okay, NQ, fuck you, we don't need this liquidity, right? We're just gonna go without you. Okay, so where's the word? So yeah, it's literally just a divergence between the two assets, right? The SMT strengthens an existing narrative, right? So if you're bullish and you get that bullish SMT, it's time to start paying attention, right? It should align with your higher time frame liquidity, obviously dealing in ranges, PDRAs, market structures, using these with your other confluences. Obviously, this isn't just like, okay, I see an SMT divergence, I'm gonna place a buy order here, you know. And session timing, obviously, just wait for the first 15 minutes of open. Wait for that SMT. Wait for internal, external liquidity sweep, and an inverse, a respected rejection block, something, guys. Liquidity sweeps, obviously, those go hand in hand with rejection blocks, in my opinion. So yeah, the SMT literally tells you where to start paying attention. You know, okay, this is a literally confirmed set in stone that NQ just grabbed this liquidity, right? This is like the confirmation of that liquidity grab, and then AES doesn't have to do it, and then vice versa. So, the smart money techniques often indicate that one market just rated liquidity, right, while the other one hasn't confirmed the move. The lack of confirmation raises questions like, is this a genuine breakout, right? So a lot of people could be looking at that sweep on NQ like a break of structure or a market structure shift, or is it just a liquidity sweep or grab? Is one market leading while the other one lags? Is institutional order flow beginning to shift, meaning displacement in the other direction to different draws, you know, higher time frame unfilled BISs or SIBs or fair value gaps, whatever you want to call them, volume imbalances, equal highs, relative equal highs, whatever. So the stronger asset is the one that refuses to take the liquidity. They're being stubborn, right? They don't need to go up, all right? And here's another example that I have of a bullish one for you guys. As you can see, this low was put in right on NQ and later was taken out on NQ, and the same low was put in on ES and wasn't taken on ES. So we can wait for essentially a lower time frame inverse up to this LR, right? Here, I'll actually hold on, guys. I have some other things that I would like to go over quick just to clear the air, I suppose. External and internal structure, right? You guys have heard me say this a shit ton of times, I assume. So, external structure, think higher time frames, like the 1 hour, 4 hour, 30 minute, 15 minute. Internal structure is the lower time frames, 5 minute, 3 minute, 1 minute, you know, the macros versus the micros. And yeah, this CalVG candle here is pretty much exactly kind of like displacement. It's kind of just like a synonym that me and my buddies just invented. So a CalVG candle is a large, long, and full candle that rips over 100 points, right? And displacement is kind of just like that. They're just kind of holding hands when they walk down the street, you know. It's a strong, aggressive move in price that shows a clear imbalance between buyers and sellers, right? A CalVG candle does the exact same thing. It just has to be over 100 points or more. Okay? So next time you guys see a CalVG candle, post that shit on Instagram Reels and tag me. Because tag Sage Erman too, actually, on that one. But wowza. There's some dump work here. There's a little liquidity sweep. Huh. Swept these internal highs. And these. And this. Nice. Filled this imbalance here. Oh, this is a little volume imbalance. Here, guys. Look at this. So, what would you do with a volume imbalance? Right? You would mark it out with the fair value gap. Mark that shit out with it. Mark this whole fucking thing out. Honestly. So it's a fair value gap combined with that volume imbalance, correct? 3 candlestick pattern still, but we have to keep that volume imbalance in there. So look at this. Wow. Tap the CE of that fair value gap pretty much perfectly. To respect it, don't close above it, and just continue to sell off. Here's an SMT for you guys in real action here. Another bullish one. So ES took this low and NASDAQ hasn't, correct? You guys can see this with your brains. This is honestly relative equal. Those might be taken, but still. You guys get the point. So if NASDAQ was up here still, right? Then that would be a bullish SMT, a better one, I would say. But yeah, guys, I may or may not record a psychology video or an equilibrium video after this, just because I don't think I'm gonna go to bed tonight. There's just unfortunately too much to listen to. And my brain just won't fucking let me go to bed. So, yeah, without further ado, guys, this was day 8 of the framework, and hope you guys have a fucking blast of a day tomorrow. Kill it on the charts, and peace, guys.